Welcome once again. Here in this video, we are going to look at the difference between before the Finance Act and Finance Act 2020 on PAYE computation. We are going to look at the differences now because it is good. Now we've known how to calculate before the act, and we also learned how to calculate using the current act. Now let's know the differences so that maybe if anybody wants to ask you, why are they even changing this law? What is even the difference? So that you have something to say. Now in this video, we are going to look critically on the differences between these two, before and 2020 Finance Act. Now we are still going to use the same information we used to prepare the before Finance Act 2020 and Finance Act 2020. The same data, the same figure, everything the same, so that we can fine-tune the difference between the two. Now, if you look here, you find out that we are using the same GP, gross pay, which is this. That is what we are going to use. And everything here is itemized. So let's move to the next page. We're not going to waste much time here because it's just to explain things. Now, this is before the Finance Act, and this is Finance Act 2020. Now, we have our GP1, which is this figure, the gross pay. They are the same. If you look at it, they are the same here. Now, the difference now is now this. Now, remember I told you that in the Finance Act 2020, they said that all the tax exemption must be deducted first to arrive at redefined gross pay for 2020 Finance Act. But before the Finance Act, there were nothing like that. And that is why you see pension here, nothing. Here we would pick our pension here. NHIS is here, is not here. NHIF is here, is not here. So this is the amendment they made in the Finance Act 2020. This is the amendment by deducting the tax exemption first from the gross pay. That will lead to what? Gross pay 2, in which they will now relieve consolidated relief allowance on. Now let's just keep going gradually. Now, if you check the gross pay 2 here, you find that it's the same figure that is here that is still here. But the figure here now changes. If you check here, we'll have higher figure here, we'll have a lesser figure here. That is to say, the CRA will be charged on this figure because nothing is here, so it is assumed it's still charging on this figure. But the Finance Act here, the CRA, Consolidated Relief Allowance, will be charged directly on your GP2 and not GP1. The previous one, before Finance Act, the CRA was charged on your GP1. But Finance Act says that your CRA will be charged on your what? GP2, not GP1. Are you getting it? Good. Now, the CRA said that 1% of GP or 200, whichever is higher, 200 is higher, 200 is higher. 20% of your GP, your gross pay, which is 20% of this, will give you this. You can confirm it with your calculator. 20% of this will give you this. I'm not pointing this because this is GP2. Though they are still the same, but I want to clarify something. That's why I'm pointing GP1. 20% of your GP1 will give you 744,000. Now, 20% of your GP1 1 will give you 744,000. Okay. Now 20% of your GP2. 20% of your GP2 will give you 68376. We'll give you this figure. Listing again. 20% of your GP before the Finance Act is on your GP1. It's on your GP1, which give us this figure. Now, the Finance Act says that the 20% will be on your what? On your GP2, not GP1. On your GP2, that will give us this. That will come down here, we'll apply our normal pension, the same thing. NHIF, the same thing. NHIF, the same thing. Now, this figure here, this, you sum them together. Sum them together and deduct it from your GP1. This, sum together and deduct it from your GP1. It will give you your what? Your chargeable income here. You can test that with your calculator. This sum together minus your GP1. That is before Finance Act will give you your chargeable what? Income. Then your Finance Act 2020, see, deduct this, sum them together and deduct it from where? Your GP1, not GP2. I did not mention GP2. All these figures will be deducted from your what? GP1. Then you will arrive at your what? Chargeable income here. Now, once you arrive at your chargeable income here, the next thing is to apply your tax rate, which we are going to look into now. The application of the tax rate. Hope the explanation is okay. Please, if there is any question, don't fear to ask me on the comment section. Please. Hope the explanation is okay. So let's move to the next one. Now, this is before and this is after. Sorry, it's too tiny. Sorry. This is before, this is after. This is Finance Act 2020. This is before the Finance Act. Now, this is our chargeable income from here. The chargeable income here. That is this and this. After you must have applied your tax rate. We did it on our previous video now, so I wouldn't want to go back to that again. I believe you know how we arrive at all this figure. I just want to explain the differences between the two. So just bear with me. This is the percentage arrive at this. This is our tax liability. This is our tax liability. Now, for us to get the amount we charge for each month, I said in our previous video that we're going to divide this by 12, the tax liability by 12. And it's going to give us, once you divide it, it's going to give us 33975.70. And here will give us 420, sorry. Here will give us 35029.90. Now, these are the amounts you have to pay every month as your payee. Now, if you check these two amounts, you find out that previously, somebody that earned this amount of money, this amount used to pay this amount as his monthly payee to the IRS as his tax liability every month. But the emergence of the Finance Act 2020 now resulted to this amount. You see, there's an increase in the amount he's paying as his what as he's paying now. So that is the slight difference. The difference is that we pay more of tax now than before. That is the difference. We pay more tax now than before. They are charging us more than before. Before you pay this, but now you pay this. Now let us check the percentage increase in these two. The percentage increase is equals to the increase 35029.90 minus the original amount you are paying before, the old amount 975.70 divided by 3975.70. This will now give you what? Let us add it together. 35029, hope you're seeing it, 0.90 minus 33975.70 equals to this, divided by 33975.70 will give you 0.031028 times 100 will give you, sorry, you're not seeing this. This will give you 3.1, approximately 3% increase. Now you can see that the tax that we are paying now has increased. This is the difference between these two. The percentage is 3. So there is an increase in tax in our payee tax now. So that is to tell you that the amount you've been taking home before is going to reduce now, because we are going to charge you more. We are going to deduct more from your salary as a result of this increase in the Finance Act 2020. That is to say, your take home will reduce. Your take home pay is going to reduce. Your take home pay will reduce because you are paying more tax now. So I believe this explanation helps you. I believe you can explain this and know the differences between the two. Yes, thank you very much for coming around. If you are a new subscriber, if you are new here, please do us a favor and subscribe, and more video will be coming. Thank you. For now, we say have a nice day and a good celebration. Thank you very much.